Remember, if they cancel anytime during the period of the contract, the insurance policy, you will be on the hook for paying back those commissions. And so you're allowed to do is to defer some of that income, because in reality it's a liability. It's not income yet until you fully earned it in the case of agencies. And so we want to think about this. And what I often see working with agencies, at least $1 million in revenue, is that we end up deferring anywhere between 40 to 60% of their income. Why? Because they haven't completely earned all their commissions yet. And so what we're doing is we're saying, hey, sure, we collected the entire commission up front for 12 months, but remember, I haven't earned it yet. So a lot of it goes to liability into your balance sheet, and it's not revenue. This allows us to defer much of that revenue and drop your profit down quite significantly, because you're shifting some of that taxable income to deferred revenues, and that allows you to reduce your taxable income. Once we've defined exactly what the correct accounting basis is, the second is the legal entity structure. And I really like to go to these in this specific order, because here's where I think it makes the most sense. First, the accounting basis. The second is the legal entity structure. Should it be a sole proprietor? Should it be an S Corp? Should it be a C corporation? Should it be a partnership? What works better for you? I have no idea. It really depends on so many factors. But typically, once you meet a certain threshold, we're going to go from a sole proprietor to an S Corp, and then from an S Corp to a C corporation. That depends on your situation, but we'll set up the frameworks and the steps that we'll need to figure out, and what are the baseline goals that we need to meet before we jump from one to the other.